Welcome to TradeTheMBI.com. This is Jonas Reporters for, well, you guessed it, Monday the 29th of October. Given what we're seeing, you know that's going to create a lot of jitters, but I've shrunk our chart here so that you could see that before when we talked about this little yellow line, we were, well, all the way back up here in the down days and that, and we were reaching these extreme levels. I was pointing out that we still had this one as well at 2635 range because that was the open, going back here to this dip below the red line in May that had needed a little bit of a filling back, and yeah, we hit it nicely, and then they bounced right off of it. I mean, you had a little carry through with stops, and then boom, bounce. And you can see it already developing. We're making lower lows on higher extreme histograms. We're still holding above from the red DOC, so quietly in all of the fear, some support's building. Now, of course, that's not going to matter if you don't get a reset of orange all the way down below. It looks like we're still some time away from that, but that doesn't mean that we can't see a building happen and a quick plunge there to show it, but you have to see new setups come in. And of course, without the steel falling, you're not getting an influx of new short-term buyers. Are already pretty much extended. Certainly short-term, long-term guys just aren't active in it. Go ahead and increase this now so that we can get closer to that and you get a clearer idea of what that looks like. But a beautiful move. We'll look at the intraday at the end of this video and be able to show what was happening within it. But no surprise from this broader short that was all the way up there at 29. So it's a pretty decent correction. Everyone who was whining about not having a decent enough correction within this power up move, they were just too early. They couldn't wait. You know, this is the beautiful thing about patience. Sometimes you just have to wait for the readings. They strung them along as long as they could, were able to get out, maintaining the highs, and then boom. Because there's nothing massively fundamentally problems in Europe existed before any of all this happened, and it becomes an excuse. So this is where the news tries to make up for justification. It's always justification. The breakdown in the euro, we could see that we had support coming in there from central banks, but once there was some difficulties, there was just such a massive amount of liquidation trying to recapture, rebalance their portfolios in the declining market that there wasn't anything they could do. And you get the exacerbation because as people become more and more familiar with what's happening with the conflict with Italy within the EU and its posturing with other EU members, poses a threat. Now, this also hurts S&P earnings. So keep that in mind when you're thinking about stabilization. A lot of times people don't want to look at it. And rising rates certainly make bonds more attractive than the risk potential. So if you've had gains built up over years, you feel comfortable taking them and moving into treasuries for a while until you think that you've gotten enough of a retrace to justify re-entry. And we talked about this where, big money had been moving out of the market for some time. And they always get out a little earlier, or at least you hear about it a little earlier because they start doing a little bit at a time so as not to create too much of a ripple. And once they're done, then they're free to let it go. So, I've talked about the ridiculousness of what the Fed was doing. You now hear the president talking about it, which is unusual because normally you didn't have presidents complain about those kinds of things, but it was a ridiculous move. There was never really any justification for the rate increases that we've seen since Trump was elected, and it's certainly putting the brakes on the market move, but it doesn't necessarily mean that's a bad thing. It just means that it's artificially creating some longer-term havoc for the U.S. as far as its debt posture and stuff, so that's no question about that. Oil had been reaching that super oversold bounce area, but still below the red line, so it's probably not likely to hold on to these levels. The whole Saudi murder thing has sort of died down a bit, but that really isn't as much of a play in here as the fact that there's still massive drumbeat that the economy is horrible and things are falling apart at the seams. So obviously that's catching some people's attention, and I think demand will be down 6 months or so from now. So that's what you're seeing right here in the market. Gold from a safety standpoint, though, Still going to be attractive, but as the market rebounds and shows support, it's going to fluctuate back and forth. But it's still been an impressive rise, and you can still see with cyan falling, it still bodes well. Oh, so here we go, 5K, look all the way back from over here. Oops, I shouldn't move that. I put this here to kind of show in an uptrend what happens. And let me just bring this over just a little bit and we'll expand upon it. So we started off with the early buy signals that came in, the follow-throughs that happened with the cyan dipping below green, even right as orange was just popping in there, and then boom, carry through all the way to the peak. We ended up with at the really super peak moment with the green dipping below, orange happening to be above. But you know that that's going to create probably a short-lived situation, because what you end up with is a closing of the mouth, which is the closing of the jaws, like here, of the orange and steel, until they come right together. That happened a little late. From a benefit to the short, you most likely would have just been stopped out from the short standpoint on that move. I mean, yes, the green dot came in time, but not a lot you can do about those. And that's where I put this box in, because you ended up with a series of these little moves where you started to get almost signals, but not quite. This was the no green, even though the orange had popped up. Here was a much cleaner one. It did actually produce the fill of the positive extremes. So if you're up at the peak on that one, okay, but they're not follow-through ones. And that's going to happen with shorting within some of the up ticks. And what I like to look for is areas where you've seen the yellow of the shakeout dip below, at least at some point, the magenta, and that lets you know that there's been a softening. It happens right here in a beautiful setup. As you end up with this cross that took place right here, but you didn't quite have green below, and you also had cyan below zero, so it wasn't as attractive to me as the next one where you're making a higher high on lower shakeout, and that one turns out to be far more successful in the breakdown. And the cover port warning starts with the steel crossing the red right about here, and then the steel crosses orange right here at the bottom. And certainly took gains right there, expecting that any pop might not be as strong. This one was actually pretty decent, came across until we got right to about this point. You ended up with orange above green. That let you know that that was heading south, and you also had the match of, if I bring it up there, you can see cyan negative 377 to the greens negative 287, so it was on its way up, but not quite, doesn't officially cross it until right there. But to me, it was the break of the 50 that was the attractive part, and then boom, it came all the way to the 0 point less, and you ended up with a little bit higher range in the pivot, and then a new setup. Short-lived, but you don't know that those are always going to be short-lived, especially when the shakeout is inside the negative 13. I like to look for that one because it lets you know that you've had a momentum build up, even if prices at the lows or lower. But then that broke down to a beautiful, beautiful run down lower. And with shakeout the steel well above, you had no resets. Then what ended up happening was that nice multiple pivot of the red took place right about here, and was still below the 23%. Made for a very nice range to the downside. And then we slid over into kind of like a consolidation muck, is sort of really like, didn't want to move that one. Sometimes you can grab it, just I like clicking because you get the little dot appears and then you can slide it over a little easier. Makes it clean to see it this way. And little ones like this where you get a short, you get a nice move down, and you're thinking, okay, I'm in great shape, and then it just reverses back up, and there's nothing much you can do about that, particularly when you're looking at a positive shakeout. You would expect that to continue to break down, but we continue to see rising azure, and gold was pretty much still well above its previous point, so it hadn't faded at all, and then we ended up with a nice run up. Positive extremes up towards the peak. The difficulty is that the best you had was this setup right here where it started, but unfortunately the green was so far from the red that by the time you even get there, it's right here, which is still going in the right direction. You still have rising orange and falling steel. It was attractive enough, that I was in on that one, but the clear DOC spread doesn't happen until the break of the ABM, and then that leads down to just below the 50%, where you get a new buy configuration on fairly decent shakeout, well above. Having come off the dip below, we would expect that we're going to revisit that area down here, and we ended up right as the market was closing with a clean DOC spread right here and fade lower, confirmed by the red dipping. We'll see if that carries through. It should on the open, but if it makes a higher pivot than this previous red, that could build some momentum for a higher move. But really super nice action. I think that some of the carry throughs are great, some of them mediocre. You're going to get that within these kinds of downturns. Liquidity's been kind of thin, which exacerbates the moves. And so as long as you're accepting wider ranges for stops with the higher ATR, you're fine. You can't maintain the same level stop when ATR jumps as dramatically as it has. So you just have to go with that and understand, though, that you're going to end up with outside gains, given that we can really see the direction quite clearly. Makes it very comfortable. So new indicator for November will be coming out. You'll have a series of changes in both the paint bar and in what you see vis-a-vis relation to these pivot markings. I'll also have those in input, so you'll be able to turn off any of the things you don't want, and I'll spell it all out in probably a separate video that we'll put on the Skype chat and you'll be able to watch to follow through with it, and it'll just make it easier visually. Instead of having to worry about what the different colors mean and stuff, it'll just go back to our red and greens for the most part, with maybe just one candle indicating the start of one of those signals, just so that that way you just don't have to pay attention to a lot of the different things. You can just follow what's happening color-wise. We'll still maintain the super dark red below the 23% and the dark green above the 76, just so that you get a highlight clear, knowing that you're in the upper and lower ranges of the market's potential ranges. As always, though, I will keep putting information up on the Skype chat and any special details. Trade well, and we'll talk again later.